This fall, the brightest minds in finance will flock to Florida for a weekend that will change your life, with insights from the brightest stars in the financial universe and an event that will bring them all together. Presenting the first annual T3 Live Finance Festival at the Mayfair Hotel and Spa in Coconut Grove, Florida, for a weekend you'll never forget and memories that will last a lifetime. The Finance Festival, a Todd Harrison production, brought to you by T3 Live and TradeStation. A portion of the proceeds to benefit the Ruby Peck Foundation for Children's Education and the Crohn's and Colitis Foundation of America. Friday, November 6th to Sunday, November 8th, 2015. Bring your spouse, tell your friends, make some noise, and take charge of your financial future. It's gonna be nuts. Space is limited, so act fast.
Good afternoon, everyone. Welcome to today's Daily Recap. I'm Evan Lazarus. I'm CEO at T3 Live. We are just 2 weeks out from the Finance Fest. I have to mention it, t3live.com/festival. And we are really, really excited. It's going to be a great weekend. Let's talk for a second about the market. It has been a roller coaster, and I mean literal roller coaster, from up to down and from down to up. As we kind of map out the timeline here of events, what you basically have, and I'm going to bring up my little line tool here, is you have a market that, and this is a weekly, so you have a market that basically consolidated for the better part of 6 or 7 months before thrashing lower, snapping back, turning back down, and then violently turning back up. So this leaves the market in a bit of a state of hard for swing traders, right? Because swing traders typically will thrive well in markets that are trending, where you buy pullbacks and they make new highs. You buy pullbacks, they make new highs. In a bearish market, you short bounces, they make new lows. This type of market, good for day traders, good for the short-term intraday. Tough, I think, for anybody that has sort of trending style. But that's the nature of the markets. They're going to ebb and flow, and they're going to change. And as we've seen, I think volatility has really dominated. We went from fairly volatile to fairly stagnant back to fairly volatile again. So, we've come a long way from if we look at the weekly here over the last 4 straight up weeks. I'm going to go back to that daily chart, and really without a pullback since we had that one reversal day right here. There hasn't been much by nature of pullback. You saw one basically day and a half reversal right here, and then just one other one day kind of pullback, and then today and gapping up. I want to show you a different view. I want to show you the same chart, but I want to show you a different view, and I'm going to show you a 2-hour chart. And this chart, basically shows you a little more detail. You can see some of these gaps, and I want to highlight, that initial breakdown. I think it's worth noting. You had a gap down here, a gap down here, and a gap down here, right? That whole monstrous sell-off was dominated by 3 very large gaps until we found some sort of short-term bottom, and then that began this process of sort of snapping back and doing what it's done. So in today's trading action, what we really did was we filled this gap, right? So if I kind of draw this horizontal line, right, you pretty much filled that gap. So as we know, buying highs, I'm just going to use this area today, and shorting lows has not really been the way to navigate the tape. And as much as the market has, driven people to chase upside and chase downside, that's been the way this trade has developed, right? So let me give you an example. When the market broke out right here, right, we saw this breakout right here. We got that one day, day and a half, and then we got this sharp reversal. And I'm sure as many people started to build, their arsenal of being short right here, what happens? The market jams itself back up, and ultimately, up and away we go. So I think you have to tread lightly. I know you have to tread lightly. And you can't chase upside and you can't chase downside until the market says you can do that. And that's just not the nature of this tape. I think it's wise to be neutral at this point. Neutral in a sense of not being a perma bull, not being a perma bear, until such time that maybe the market becomes a little less chaotic with its week to week changes. That's really I'm giving you, I think, what is a very pragmatic and sensible thought process from somebody that's tried to call the market short and has worked for 3 days and then reverses in your face, and then has tried to be on the long side, and again that falls apart too. So it is a market where you want to have smaller time frames, smaller expectations, and you don't want to chase. You don't want to buy up here, when everybody else is trying to chase a move. Chasing downside, chasing upside, chasing period is just a recipe for disaster. And as you go through, you can look at some of the stocks that reported. Google had earnings, and everything jumping up at the open, but just like kind of on my point, chasing upside, buying the open is chasing stock, and selling off pretty aggressively today from open to close, as a result of that large gap. So the market is definitely, I think, eating people up outside of those that are, like I said, trading on 15, 30-minute time horizons that have smaller risk-reward scenarios. Those that are more swing-oriented, certainly tougher to get their hands around in this tape. Amazon, same thing. Everything on the outside looks great. Let's see if it holds this breakout, right? So you have this, these highs here, we gapped above. This is going to need time. These stocks, these Googles and Amazons and some of these large moves to the upside, they'll need just, pure time to set back up if they're going to resume more upside. On the flip side of that, this week we saw Chipotle, CMG, right, gapping down. So a lot of these moves, coming off of gaps, both to the upside and the downside, as is always the case in earnings season. So give a chance for many of these stocks to see if they, can build some bases at levels and either wind up being, opportunities for follow through to the downside in this particular example, or the upside in other examples. So stay nimble, keep your time frames tight, your risk tight, your expectations tight, until such point, the market really changes its tune in terms of, the volatility and the roller coaster of this week to week or 3 weeks up, 3 weeks down, violent, type of movement. Because if you are those that are, swing oriented or looking for follow through, it's definitely has been a tough road to hoe. Commodities, just one other, area I think to look at. You look at the GLD. GLD, looks to me like it could be setting up next week into some sort of bullish consolidation area, nice bullish, pullback in here. So I would look for, potential upside in gold and silver and some commodity related names. All look like they could have some opportunity. So keep a watchful eye. Getting above that resistance here in silver. Again, little bullish consolidation here. Could be opportunity for some more, some follow through there. And OIH, oil names, oil energy names, also it looked to me like they, could have a setup here building for potential, a little more follow through. But we'll keep an eye on that for next week. And as always, I'll talk to you. Enjoy the weekend, everybody, and